No toe is not enough.
Alright, what's up traders? Today we're breaking down a 6 a.m. CRT futures setup that occurred on March 4th during the New York session. Now, if you missed it, don't worry, I've got you covered. Obviously, we haven't covered this yet. We're going to go over what happened, why it worked, and how you can spot these moves in real time. Now, this was one of those textbook plays where the market basically handed us a setup on a silver platter. So roll up your sleeves, pull up your charts, follow along, and let's get into it. So essentially, the 6 a.m. CRT model is only for futures, and it works using the 4-hour chart on futures. So essentially, you have the 6 a.m. candle, and you mark out the high and the low. So I'll do that for us now. So there's CRT high, and then CRT low as well. Rightio. We have the CRT high and the CRT low. Now, this is literally pretty much the exact same as the 9 a.m. CRT model in terms of, candle range theory, but the timing slightly varies. Now, we have this CRT low, which is marked by this thick candle here. Now, this is not really what I like to call a swing low, so I would preferably use this low over here. Why? So obviously this wasn't a swing low. It took out this low here. I will not mark this out simply because it formed during 10 a.m. and the 4-hour candle closes at 10 a.m. Now, we have obviously sweep on liquidity. We have this weekly buy side and balance sell side inefficiency, which is our bullish fair value gap. And if we look at the 5-minute, we have this massive order block right here. For the 4-hour CRT model, I will only ever take 5-minute change in state of deliveries or 5-minute order blocks. I will never take a 3-minute, a 2-minute, or a 1-minute. I found that you get stopped more often, and the 5-minute order blocks are much higher quality as well. Now, obviously, we have this 5-minute order block which we have marked out. We have the lower time frame CRT on the 15-minute, which is this candle here. Right, close below this. This is our CRT. Now you can see it had a slight closure below. I will not count this as a closure. It was a very minimal closure below 1.75 pips. So we have this 5-minute order block. We have the 5-minute change in state. We also have a 2-minute order block. Now, the reason I have this 2-minute order block marked is, well, I will only mark it after we close above the 5-minute order block. I will use the 2-minute order block for an entry in a deeper retracement into the 5-minute order block. So in essence, price might dig deep into the 5-minute order block, into this 2-minute order block, which is what I will use for my entry. Remember, only using that when the 5-minute order block has been closed above. So we've closed above the 5-minute order block, as you can see, with this up close candle right here. Then we tap back in immediately. We fool around a little bit, accumulate. Eventually we tap into this 2-minute order block right here. I also want to mention, notice how we never close below the midpoint. And this is our 2-minute propulsion block as well. Notice how we reject the midpoint and never close below that midpoint. We also have a 1-minute IFVG. Here, we tap into it, take this liquidity, which is what? The swing low. So we tap into the IFVG, we take a swing low, and we reverse up. This is high probability. A high probability IFVG occurs when we tap into the IFVG after creating it. We take out a swing low, and then we inverse it. And as you can see here, it never closed below that IFVG. Reject, reject. Okay. Now, this is all within this weekly bullish FVG. Okay. Now, let's dive into the entry. We have the 5-minute order block up here. So we get the closure. We have the 2-minute order block. Now, our entry is going to be the retest of the 2-minute order block, which is going to be right here. Not here. Why? Because we only use the 2-minute order block after we close above the 5-minute. In case we get a deeper retracement, right? So we take that, we enter off that retest, stop loss at swing low, right here, targeting the CRT high. Okay. Now, we've discussed our entry. We have the 4-hour CRT. We have the lower time frame CRT on the 15-minute, which has been swept, right? We have the weekly busy, which is our high time frame key level. We have the 5-minute order block, 2-minute order block for deeper retracement. Why did I use a 2-minute? I did not like, listen, 2.16R is more than enough, but because I take partials, I like to take the higher risk reward plays. So for me, 4.73 risk reward is amazing. Now, I want to dive into why I was looking for longs. Okay. So why was I looking for longs? Let's look at what happened in the previous sessions. We had Asia clearly consolidating. London tapped into a 4-hour sell side imbalance, buy side inefficiency. The SIBI, which was created during Asia. As you can see, the swing high caused the low end of the FEG. London tapped into it, and we expand down during New York. Now, obviously, we then head to a high time frame weekly key level. So from here, we expect price to reverse higher. Okay, and normally when London hits a key level, it will create the high of day. But we are in a discount market. We have hit a weekly busy. I'm expecting price to reverse and target at the minimum the CRT high, and then London highs, but eventually surpassing the 4-hour bearish FVG. Now I want to share an image with you. Now on this image, you can see the lower time frame. You can see the high time frame price action marked by this red line. Now you can see a key level there is in the discount, right? That key level is going to act as resistance, but it's not going to cause a reversal. It's going to cause a lower time frame reversal. However, eventually that key level is going to be broken through with a lower time frame expansion to then head to a key level in the premium to then officially reverse with the high time frame aligned with the high time frame expansion. So essentially, this is all the low time frame retracement and low time frame expansion, and then followed by the high time frame expansion to the downside. And as you can see on this chart, we have this 4-hour SIPI, which is in a discount with the overall 4-hour dealing range. So it will act as resistance. We tap into it, and then we tap this high time frame bullish discount PDRA after taking this low. Okay, notice how in the picture we took the low total soup. We've also taken the low here. And then we head higher, surpassing that 4-hour value gap. and eventually I want to see price continue higher, reaching into some sort of premium. Now, I also want to share another image with you. So this is our power of three, or our AMDX. This is our accumulation, the manipulation, tapping into a higher time frame key level, manipulating above the accumulation highs, distributing towards the draw and liquidity, which was this 4-hour low, and then this weekly BISI. Once we hit this higher time frame key level, we anticipate a reversal. Why didn't we expect it? Why didn't I expect a continuation? This is a weekly BISI on the discount. Okay. I expect this key level to hold, at least for the meanwhile, and to cause some sort of reaction since we saw this 4-hour CRT play out. That was my confirmation that we were going up. So the reversal to the upside, targeting a higher time frame key level, which are these highs, because they are 4-hour highs, or this 4-hour SIBI. This is AMDX. Accumulation forms between the closing bell till midnight. Manipulation from midnight to 6 a.m. Distribution from 6 a.m. to 12 p.m. and X / distribution / continuation from 12 p.m. to 18 o'clock opening price. So the closing bell. Feel free to take that down. This is also known as quarterly theory. Obviously, that's going to come later. Very, very early for the quarterly theory, and not something I implement much, but it can be used as a confluence to formulate your trade ideas. And we have 12 o'clock midnight opening price here, which is also known as true day open. And ideally, when we're below true day open, we want to look for buys. And when we are above true day open, we want to look for sells. Okay. That is pretty much it. Just a little trade recap. I hope you enjoyed. Let me know if there's anything else you want to know. I hope I covered enough for today. We covered the 6 a.m. 4-hour CRT, the entry, the confluence behind the trade, and overall why we expected that specific key level to hold, and why we were also targeting this 4-hour SIBI due to it, obviously, mostly due to it not being a premium bearish PDRA, but rather isn't a discount. So we expect it to act as a resistance, but eventually be broken through for the meanwhile. But obviously we have to wait and see what happens and how price reacts to these levels. I hope you enjoyed. Let me know if you have any other questions, suggestions. Check out my link tree. I have my Discord and my X profile linked. Feel free to join at any time. So far, we're still growing the community, so it's a work in progress. But for now, good luck, good trading, and see you all next time.